for being here this morning. So this is our normal press conference to announce the second quarter GDP results and also the conditions in the monetary and financial conditions. So bersama dengan saya ialah Ketua Perangkawan Malaysia, Datuk Seri Dr. Mohd Uzir Mahidin. As all you know, that DOSM is the official agency that collects and publishes our GDP numbers. So I'm going to continue with my presentation in English for the benefit of our international audience. So in the second quarter of 2022, global growth moderated. Growth was weighed by further increases in energy prices amid ongoing geopolitical tensions, leading to higher inflation. Containment measures also affected economic growth in China early in the quarter and caused a brief re-escalation in global supply chain disruptions. However, economic activity in China picked up as restrictions were eased towards the end of the quarter. Meanwhile, global trade in goods moderated following a shift in demand from goods to services as most economies reopen. So let me now hand over the presentation to Dr. Seri Dr. Uzir to announce Malaysia's GDP performance in the second quarter of 2022.
Thank you, Governor. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and very good morning. In the second quarter of 2022, the Malaysia economy recorded higher growth of 8.9%, supported by the expansion in domestic demand, recovery in the labour market, and continued resilience in external demand. On a seasonal adjusted quarter-on-quarter basis, GDP expanded at a strong pace of 3.5%. Pada suku kedua 2022, ekonomi Malaysia mencatatkan pertumbuhan 8.9% disokong oleh pengembangan dalam permintaan domestik, pemulihan pasaran buruh dan permintaan luar yang terus berdaya tahan. Pada pelarasan musim, bagi perbandingan suku tahun ke suku tahun, KDNK berkembang kukuh pada 3.5%. On the supply side, the services and the manufacturing sector continue to drive growth. The services sector expanded strongly at a double-digit growth of 12.6%, supported by higher consumer spending as the country transitioned to endemicity, reopening of Malaysia borders and the additional support from policy measures. The manufacturing sector grew at a higher single digit of 9.2%, with continued strong demand for semiconductors and consumer-related products such as motor vehicle. The agriculture sector contracted as production of livestock and other agriculture was affected by rising input costs, particularly for animal feed and fertilizer, and labour shortage. The mining sector remained in contraction as output was weighed down by closures of several oil and gas facilities for maintenance. Meanwhile, the construction sector recorded a turnaround supported by progress in large non-residential projects and continued implementation of small-scale projects. On the demand side, the higher growth was driven by further improvement in domestic demand. Private consumption grew at a faster pace, 18.3%, driven primarily by the recovery in the labour market and support from policy measures. In particular, spending on necessity and selected discretionary items such as restaurant and hotel, recreational services and household furnishing expanded further during the quarter. Private investment was supported by improvement in structures, particularly in the non-residential segment, and continued growth in M&E investment. Meanwhile, public investment rebounded, attributed mainly to higher capital expenditure by public corporations in oil and gas and telecommunication sector. Public consumption expanded at moderate pace due to lower supply and species spending. Net export contracted as growth of import outpaced that of export amid stronger domestic demand and firm mitigation measure to build up inventory buffers. The country current account of the balance of payment registered a higher surplus of RM 4.4 billion or 1.0% of GDP. This was supported mainly by smaller primary income deficit driven by higher income generated by Malaysian firms investing abroad. In addition, the services deficit narrowed, supported mainly by higher travel receipts amid reopening of international borders. In the financial account, net FDI recorded an inflow of RM 17.3 billion during the quarter. These investments were channeled primarily into the manufacturing sector and financial services subsector. Let me now hand over back to Governor.
Thank you, Datuk Seri Dr. Uzir. Going forward, the Malaysian economy is projected to continue to recover in the second half of 2022, albeit at a more moderate pace amid global headwinds. However, given the strength in the first half of 2022, which grew by 6.9%, we expect growth for the year to be at the upper end of the range of 5.3% to 6.3%, even after taking into account the slower global growth. Growth for the rest of the year and 2023 would be driven mainly by private sector expenditure, particularly as tourism sectors normalize towards pre-COVID levels. Investment activity stands to benefit from the realization of multi-year projects such as the My Digital, East Coast Rail Link, and the LR3 project. Supply chains are also expected to ease as receding COVID-related disruptions and slowing global trade alleviate some of the pressures going forward. This would offset the expected moderation in global growth. There are also several factors underlying the resilience of our exports, which I will explain in a few minutes. The domestic economy would be supported by the improving labour market, which has shown continued improvements in tandem with stronger economic activity. The improvement in the second quarter was supported by robust employment growth. Jobless claims fell significantly and rehiring of retrenched workers remained relatively strong. Higher frequency data from SOCSO indicated a continued decline in layoffs and relatively strong hiring activity in the second quarter. On a year-on-year basis, private sector nominal wages improved in line with economic activity, recording a higher growth of 7.8% in the second quarter. This was partly supported by the minimum wage hike, driven by expansion in both services and manufacturing sector wages. Going forward, continued expansion in economic activity is expected to lead to a broader recovery in the labour market. Hiring intentions were strong, with higher job creation in the second quarter. For example, for the second quarter this year, about 29,400 jobs were created compared to 25,800 jobs in the first quarter. So this will be key in supporting the domestic economy. Additionally, we recognize that the recovery is uneven and improvement in some segments have continued to lag behind others. While most economic sectors have recovered strongly, about 20% of the economy still remain below pre-pandemic levels. This is most severe in the construction sector due to labour shortages and higher input prices. Tourism-related industries have only recently begun to recover. In the labour market, the recovery amongst vulnerable groups, particularly the youth and elderly, along with low-skilled workers, is lower relative to other groups in the labour market. It is for these reasons, while macro policies are recalibrated as the overall economy recovers, Targeted policies would continue to support these segments of society. On the external front, global growth would be weaker than earlier forecasts due to higher inflation, more severe impact of lockdowns in China, and tighter monetary policy. Being a small and open economy, this slowdown would have an impact on our exports. Nevertheless, Malaysia's diversified export structure across products and markets will help us face potential shocks in demand for any specific products or from any specific countries. Recent data also shows that Malaysia's gross exports continued to register double-digit growth. This was supported by higher demand for E&E products, as well as firms' adaptability to mitigate supply chain disruptions. Higher commodity prices provided a further impetus to Malaysia's export. Going forward, demand for E&E products is expected to remain firm, in line with industry projections in 2022 and 2023. Furthermore, our engagements with domestic E&E firms indicate strong demand outlook, with 54% of E&E firms engaged by the bank indicated full order books for the next 6 to 12 months, while about 20% indicated full order books beyond the next 12 months. Our engagements with the industry also affirm that firms have been taking proactive mitigation measures to minimize the impact from the supply chain disruptions. This includes building of buffer inventories, as reflected in the strong intermediate import growth for the quarter. Nevertheless, the growth outlook continues to face challenges. On the global front, a more severe deceleration in global growth is a key downside risk factor. This could stem from multiple factors, including over-tightening of monetary policy in the US, energy crisis in the euro area, and renewed lockdowns in China. Supply chain disruptions could worsen with further increase in global commodity prices if geopolitical conflict escalates. Supply conditions could further be exacerbated by more acute labor shortages or adverse weather conditions. Stronger cost and price pressures could dampen household spending and investment activity, weighing on the economic recovery. This outweighs upside risks from a stronger labor market, rapid improvement in tourism, and any additional domestic policy measures. Let me now turn to inflation. This being a global phenomenon, let me start with the international scene. In the past quarter, inflation has risen in many countries. Notably, the higher inflation continued to largely reflect elevated commodity prices due to the ongoing conflict in Ukraine. In some countries, such as the US and the UK, their tight labor market conditions and strong demand also added to their inflationary pressures. As an open economy, Malaysia is not immune to the elevated global commodity prices. I want to bring your attention to food inflation, which has been the main driver of domestic inflation recently. The stylized illustration shows three main points. First, high food prices are mainly caused by the higher prices of key global commodity prices. Second, the strength in the US dollar, although not the main driver, has also compounded the price pressure. In the case of the price of wheat shown here, exchange rate has contributed to approximately 20% of the increase in its price in ringgit. Finally, other global and domestic factors, which vary across goods, are also contributing to food inflation. This includes logistics, labor costs, and demand. Moreover, the impact of exchange rate movement can also vary across different items. Overall, for Malaysia, these cost pressures have led to higher headline inflation, which rose to 2.8% during the quarter and 3.4% for the month of June. Core inflation also increased to 2.5%. This can be attributed to the improvement in demand conditions amid the high-cost environment. The increase in core inflation was predominantly driven by food away from home and other food items. Correspondingly, the share of CPI items recording monthly price increases averaged higher at 63% compared to the average during the period of 2011 to 2019 of about 45%. So we will continue to monitor these developments. For the remainder of the year, headline inflation is expected to trend higher in some months, due in part to the base effect from the discount on electricity prices implemented in the third quarter last year. Core inflation is therefore projected to average higher, closer to the upper end of the 2 to 3% range, as demand continues to improve amid the high-cost environment. Upside risks to inflation outlook are subject to the strength of domestic demand, global prices, and domestic policy measures. Nonetheless, the extent of upside pressure on inflation are expected to remain partly contained by existing price control measures, fuel subsidies, and the existence of some spare capacity in the economy. In view of the positive growth prospects for the Malaysian economy, the MPC decided to further adjust the degree of monetary accommodation by raising the OPR to 2.5%. It is important to remember that we are coming from a historically low OPR level. This means that despite the OPR adjustments, monetary policy would remain accommodative this year to support the economic recovery. Going forward, the MPC will continue to assess evolving conditions and their implications on the overall outlook to domestic inflation and growth. Any future policy rate adjustments would be done in a measured and gradual way. Our stance remains that monetary policy will continue to be accommodative to support a sustainable economic growth in an environment of price stability. I know that there has been a lot of interest in the recent monetary policy adjustments, so let me take a moment to explain further on why we increased the OPR. I would like to reiterate that the OPR was first increased in May, as it was deemed that the large support needed during the pandemic was no longer warranted. This view remains unchanged as the economy continues on its recovery path with a growth of 6.9% in the first half of this year. So it is very clear that we are no longer in a crisis. Growth will continue to be supported by firm domestic demand amid better labour market conditions, recovery in tourism activity, and improved investment activity and prospects. With the recovery in domestic demand, we are seeing some early signs of demand-driven inflation. As such, the recent OPR adjustments will also preemptively manage the risks of excessive demand on price pressures. This is important because whenever the inflationary pressures are excessive, it is more damaging to the economy and causes even deeper hardship for the rakyat compared to a gradual increase in policy rates. As such, the gradual adjustment in the OPR are necessary to avoid the need for stronger measures in the future, such as faster and steeper increases. We obviously do not want to be in this position. We will continue to conduct monetary policy in order to achieve our goal of price stability and sustainable economic growth over a longer term. This is in the interest of the economy and the well-being of the rakyat, instead of having a boom and bust economic cycle. In the second quarter of 2022, global financial market conditions continued to tighten following policy rate hikes by major central banks. In particular, the US Federal Reserve had raised the federal fund rates by 200 basis points cumulatively in 3 consecutive meetings from May to July against the backdrop of high US inflation. Investors' risk sentiment was also negatively affected by rising concerns on the global growth outlook and the ongoing conflict in Ukraine. These global developments have led to a broad-based strengthening of the US dollar against major and regional currencies, including the ringgit. Nonetheless, the ringgit has remained broadly stable against major trade partners, with the ringgit nominal effective exchange rate, or NEER, registering a marginal depreciation of 0.1% in the second quarter. The 10-year MGS yield rose by 36.5 basis points in tandem with the upward movement in global and regional bond markets. Since 1st July, however, MGS yields have trended lower. So in this challenging environment, domestic financial markets will continue to be subject to episodes of heightened volatility. However, spillovers to domestic financial intermediation are expected to remain broadly contained, supported by Malaysia's healthy external position and strong banking system. In addition, Malaysia's external position provides us with resilience against external shocks. This is supported by a sustained current account surplus, higher foreign currency external assets relative to foreign currency external liabilities, and adequate international reserves. Notwithstanding these important external buffers, the bank continues to remain vigilant of the risk from disorderly financial market adjustments and stands ready to utilize our policy tools in addressing any excessive volatility so that financial intermediations remain uninterrupted. Net financing grew by 4.9% at the end of second quarter as outstanding loans continued to grow by 5.4%. Outstanding business loan growth improved to 5.5%, reflecting higher growth in loan disbursements for both working capital and investment. For households, outstanding loan growth saw a further increase to 5.7%, with higher growth recorded across all loan purposes. Growth in loan disbursement and repayments also improved amid higher demand for loans and a gradual lapse in repayment assistance program, respectively. Financing by banks continued to support MSME business, with outstanding financing to this segment expanding at a faster pace of 7.5% year-on-year as at end June 2022. Financing activity continued on a strong momentum during the quarter of 2022, with disbursement trending at a much higher levels than before the pandemic. This has supported MSME's higher financing needs for working capital as businesses recover and expand amid the firmer growth trajectory, while also faced with rising costs. While credit risk remains elevated amid the gradual expiry of relief measures, the banking system remains well positioned to support household and business financing needs or debt restructuring as the economy recovers. Banks continue to remain prudent in loan provisioning practices to account for higher credit risks. Nonetheless, the accumulation of additional provisions are likely to be more modest given the sizable buffers already built up over the past 2 years. Banks also continue to maintain strong capital and liquidity buffers to absorb potential losses and support intermediation needs. As the economy continues on its recovery path, policy priorities should now accord a stronger focus on longer-term policies to complement short-term measures. This is to secure a sustainable and inclusive growth and boost our resilience against future shocks. These structural reforms will propel Malaysia's growth by generating high-quality and high-income jobs for Malaysians and improve the well-being of the rakyat. Several critical areas of focus include, first, attracting quality investments that can generate high value-added activities and high-income jobs. Second, developing a high-skilled workforce ready for the economy of the future. Third, accelerating automation and digitalization. Fourth, enhancing social safety nets and improving social protection frameworks funded through a more targeted subsidy regime. And finally, advancing the environmental, social, and governance agenda to ensure Malaysia remains competitive on the global front. So allow me to conclude the briefing. I wish to reiterate a few points. Malaysia recorded higher growth of 8.9% in the second quarter of 2022, driven by domestic demand as the country transitions towards endemicity. Growth for 2022 is expected to be on the upper end of the forecast range of 5.3% to 6.3%, supported by private sector spending amid higher tourist arrivals and recovery in labour market conditions, which more than offset the moderation in external demand. Headline and core inflation for 2022 are expected to average higher, reflecting improvement in economic activity amid higher costs. Lastly, there should be a stronger focus on longer-term priorities to complement short-term policies to ensure sustainable and inclusive growth going forward. So I have now come to the end of the presentation. My team and I, as well as our friends from DOSM, would be pleased to take on questions from the media. Thank you.
Thank you, Governor. Before we begin the Q&A session, two quick things. We'll be taking questions in 3 segments. The first one on the economy, the second on the financial system or financial stability, and the third one on other and miscellaneous stuff. On the second point is that please raise your hand. I'll call on you to get your question. Please use the mic in front of you, and when asking your question, please state your name and the media in which you are affiliated with. Okay, so let's start for the first one on the economy. Any questions?
So we can now move on to the second section.
Going once? No question?
Hi, Governor. Yeah.
Hi.
Hi, yes, go on.
Jason here. Just to be sure, you said that growth will be at the upper end of the forecast, even as 20% of the economy is below pre-pandemic level. Is that correct?
Mm-hmm.
So just to be sure, you're expecting that the domestic demand to offset any weakening exports, right?
Yes, private sector expenditure. Yep.
Okay. So I'm just wondering whether if let's say it's going to be upper end of the forecast, and that means 3Q and 4Q would moderate from current levels, right? From 8.9%, I mean, arithmetically. So is that the case?
Yep.
Or?
For the third quarter,
okay,
we do expect that growth will be much higher because of the base effect. Because last year we recorded negative growth. Jason, you recall that was when the full FMCO impact was felt. So that would be that base effect. So for the third quarter, the annual growth would be even much higher than the second quarter because of the base effect. But like what I have said, we have enough tailwinds in the domestic sector from domestic demand, private consumption, private investment, even public investment. So domestic demand would offset the moderation in external demand. So all in all, for the whole year, we are still sticking to our growth forecast of 5.3 to 6.3.
So any other questions? Sorry, we have one over there.
Yeah. Hi, Governor. I'm Isan from GG Press. The CPI is often complained do not reflect what's actually on the ground. How about everyday price index and perceived price index? Can be issued monthly along with CPI?
So I'm going to get my team to answer. I know that the everyday price index and the perceived price index, we do publish it, I think we have to publish it quarterly in the past. So on a monthly basis would be a bit of a tall order, I think. Yeah. So, Dr. Uzir, do you want to commit?
Okay. When we measure the CPI, we have 552 items in the basket. And we know that in the basket, there are some products where we consume continuously daily. And there are also where we consume, maybe we bought one in a month, one in 3 months. So a lot also prices that in the 552 item is not really fluctuate or really have the seasonal effect on the ground. So I like to, for example, in the basket we have like communication, and also we can see that the communication price is hardly moved. So that's why when people talk about inflation, people try to relate their personal experience where they consume on the daily basis, and that the kind of food product like fishing and also all other food items. So actually in the CPI, we collect a lot of the not only food item but also on the services and also durable item. They not really need to be, I mean, on average per household, they not frequently change or not. Not all the household consume 552 item in one go in a certain period of time. Yeah.
To follow up, is everyday price index and perceived price index a better index than CPI, or it's just same? A better index to reflect the inflation felt by the people.
It depends. If you just focus on the whatever they consume on the daily basis, is may. But in our basket, it's not only the item that bought frequently on daily basis. There are some, for example, you buy car, not you buy every month. You travel, maybe not every month. They also not maybe not in the daily measure what you mentioned just now.
So Hannah, you want to come in?
Just to add in, when Bank Negara come up with the EPI, the Everyday Price Index, as well, and the Perceived Price Index, is really to show that perception of cost of living or perception of inflation would be different because of the way goods and services are being consumed. Whereas the CPI is a computation of an average basket of an average consumer consumption. So that's really to show the biasness in terms of perception. So it is it's an analytical tool to actually assess pressures that households are feeling.
All right, thank you. One question towards the end, but before that, can we postpone photo kit taking to the end, please? I think it's a little distracting with the flash photography. Sorry, thanks. Yes, sir, at the back.
Hi, Adam from The Edge. Governor, can you share your outlook on the Malaysian labour market for the rest of the year, and then what's your expectation of the upward pressure on wages at this point in time? How do you see the trend moving forward? Thanks.
So, like what I have shared, labour market conditions did really improve in the first half of this year. It is now at 3.8%. And our labour participation rates have also exceeded the pre-pandemic levels, and job creation have continued to increase. So you see in many indicators that has continued to improve. And as the economy continues on its recovery path, so we do expect that the labour market conditions will also gradually improve.
So yes, we'll take a couple of questions at one go. Yes, ma'am.
Hi, this is Charlotte from NNA Kyoto News. Good morning, Governor.
Good morning.
So just now you mentioned that you indicated that we would probably see a faster and steeper increase in terms of the rates. Are we going to see OPR to be increased to the pre-pandemic levels in this year or next year? Because you did mention that we are no longer in a crisis. Yep, thanks.
Okay, Governor, before that, any other questions? So another question, yes, ma'am.
Yeah, Amanda from TV3. Just a quick one. For the current account surplus for the first half is 0.9% of GDP compared to previous years. It's quite a high percentage. Is this going to be a declining trend going forward? How do you see for the full year of for this year, the current account surplus? Will it be enough to sustain the external shocks? Thank you, Governor.
Okay, so we have two questions. The first question, Governor, is on OPR and whether it will go back to pre-pandemic levels. And the second question is on the trend of current account surplus.
Right. So for OPR, to go back to the pre-pandemic levels of 3%, we are at 2.25%, right? So that would mean that our OPR would have to increase by 75 basis points. we did mention in our monetary policy statements, in a lot of our publications, and even in my speeches, we have said that, monetary policy, any adjustment, any recalibration will be done in a gradual and measured manner. So, changing the OPR by 75 basis points this year would not be in line with that kind of way of adjusting. So the MPC will continue to assess the situation is very fluid globally, especially there's a lot of uncertainties in terms of commodity prices. So the MPC will continually assess the evolving conditions and how it impacts our growth outlook and inflation outlook.
Governor, on the second question, which is on the current account balance.
Yeah. So we do expect the current account balance to improve in the second half. And our earlier projection of current account surplus of how many percent would still be maintained. What is the projected current account surplus this year?
It's above 4% at EMR, Governor.
Yeah, 4%. Yeah. So we had projected that the current account surplus when we released our EMR in March to be at 4% this year.
All right, thank you, Governor. Any round of questions from the economy? So we have one question over there. Sorry, Jason.
Yeah,
one
sure,
question
go
over
ahead.
there. Yep, ma'am.
I'm Wen Ying from China Press. Just want to clarify that is this the Q2 is 8.9%, right? Is this the highest quarterly high? Record high quarterly record?
No. I think last year, second quarter 2021 was the highest at 17%. At 17%, yeah.
All right, thank you, Jason.
Hi, Governor. I want to ask about the ringgit. I understand you've talked about previously about its relative and so on, but nevertheless, the fact is that the ringgit is weakening. I'm just wondering if the central bank is concerned about the weakening of the ringgit. I understand it's relative, but still it's weakening, like compared to previous years. So I'm just wondering if the central bank is concerned. Thanks.
Right. Thank you, Jason. Governor, maybe we want to collect one more question. Any other question? Sorry, yes, ma'am.
I have a question on the subsidy. As the government is right now is on the midst to reformulate the subsidies like targeted approach. So there's concern that this may maybe lead to the surge price of maybe the food price and other related price pressure. So what is the Bank Negara view on this?
Okay. Yes, sir. Last one.
Sorry, just to add on the subsidy question. So when does Bank Negara think is a good time for the government to, roll out or pull back the blanket subsidies and roll out the targeted ones? Thanks.
Okay, so there are two group of questions, Governor. The first one is, are we worried about the weakening ringgit? And the second one's on subsidies, Governor.
So can we show the ringgit performance, the chart? So we are in an environment of strong US dollar. I mean, the Fed Fund increased, interest rates by about 125 basis points already. So, when we are in an environment of strong US dollar, all other currencies will be weaker. But as you can see in the chart, so when we look at our exchange rate against our trade partners, we are relatively stable. We depreciated, our NER depreciated by only 0.1% during the quarter. So we are moving in line with our trade partners. We cannot be, stronger, much more stronger than trade partners, then it affects our competitiveness also. So at this point of time, when you look at our currency, yes, against the US dollar, because of the strong US dollar, all other currencies are much weaker than the US dollar. But the magnitude of the depreciation of the US dollar is in line with other regional currencies. And when we look at even further against our trade partners, we are relatively stable. So we have to move away from our fixation of a bilateral exchange rate and look at it from a bigger perspective. And one way is to look at our NEAR. Anything else anyone would like to add? Rashid? No. Okay. Ra? No.
Right, Governor, the second question is actually on subsidies, mainly the bank's comments on the phasing out of subsidies or rationalization of subsidies, and if so, when is out of our view the best time to do it?
So the outcome that we want to achieve at the end of the day, regardless of where you sit in public policy making, is to have sustainable and inclusive growth, right? And we are seeing the uneven growth, and there are segments of the household, segments of businesses which have yet to revert to pre-pandemic levels. So assistance needs to be given to these vulnerable groups. And that's where the rationalization of the subsidy from a blanket to the targeted, the savings that you can get, will help to even strengthen our social protection, to provide the safety net to the vulnerable groups that may take a lot longer time to recover from the pandemic, or for them to be able to acquire new skills, upskilling, reskilling, in order for them to meet the future jobs, the jobs of the future. So that can only be done if we move from this blanket subsidy, which is costing the government a lot of money, to a more targeted subsidy. So yes, when we move to an environment of targeted subsidy, that will push up inflation. But because you are going to use that savings to protect the vulnerable groups, the impact it will have on the economy can be managed. So when is the best time for us to move to a targeted subsidy regime? When we are not facing high inflationary pressures, would be when it would be the best time for us to move to a much more targeted subsidy. So the targeted subsidy rationalization must account for two things: the current inflation in the environment, and if it's done, it has to be done in a phased manner.
All right, thank you, Governor. All right, I think in the interest of time, I'm moving on to the second segment, which is on financial systems and financial stability. Any questions on financial stability? Yes, one over there. Yes, ma'am.
Hello, good morning, Governor, ladies and gentlemen. I'm Ishwari from Malay Mail. So I think we've all heard of the incident of the iPay88 data breach. And today, well, of course, politicians are up in arms about it, opposition politicians. And now today, there's a statement questioning if Bank Negara Malaysia actually had information about this, and why were there no decisions or no information channeled out about the issue, because the breach has been happening for a while and only recently it was revealed. So what he's asking is, if, to quote him, if Bank Negara Malaysia was in cahoots with the whole thing. So I would like to hear Bank Negara Malaysia's response to this. Yep.
Right, thanks. I think, Governor, we will take this at maybe the last segment in the others.
Definitely.
Yeah, we will definitely get back to this. Just on financial stability first. Any questions on financial stability?
Yeah, you want to go? Yeah.
Yes, one over there. Yep. Chester, I think you need to speak up, Chester. Okay, so Governor, the question is, we have increased OPR by 50 basis points. How's the economy taking it?
So far, we are still saying that, like what I said, our recovery is still on track. And on the repayment of loans, that the momentum in terms of repayment of loans have not been impacted. So so I would say that the economy is absorbing it quite well.
All right. Thank you, Governor. Yes, we have a question over there, sir. Yep.
Hi. Okay. Just have to check with you, Governor. Can you confirm there will be no one-shot increase of OPR above 25 basis points moving forward? And sorry. And second question is there a concern about debt service charges in this environment? Thanks.
All right. Thank you. Any more questions? There are two questions there. I'm just going to take one more. All right. Okay, Governor, there are two questions. One, is there going to be a one-off, are you ruling out a one-off 25 basis points increase, and are there any concerns on debt servicing charges?
Well, like I said, that we are committed to adjust our monetary policy in a gradual and phased manner. So increases of 50 basis points, 25 basis points would not be consistent with that narrative. And we need to do it in a gradual and phased manner so that we continue to be on the recovery path, and we are tackling any possible demand pressures that may add to the high inflation, high cost environment that we have currently.
Governor, the second question is, do we have any concerns on debt servicing charges?
Okay, I'm going to get Jess to help me answer this question.
I think on debt service charges, that's largely going to be manageable, and particularly for lower income segments. Many of them actually, most of their loan accounts are fixed rate loans. So, about 56% of loan accounts for this segment are fixed rate loans. So they will not be affected by any increase.
Sorry, to add to that, what about the government's debt service charges, if I may ask?
Well, the government is committed to its fiscal consolidation. And it will be tabling its Financial Responsibility Act soon, as what has been announced in the budget. So, as the economy grows and the economy recovery gains traction, that will provide the opportunity for the government to continue on its fiscal consolidation path. So moving forward, it will result in lower debt servicing charges for the government.
All right, thank you, Governor. In interest of time, I'm moving on to the third segment. Governor, we had a question previously on the IP88 situation, on whether we had prior knowledge on this issue.
We only knew about IP88 recently. And since then, we have been in communication with IP88, and more importantly, is to make sure that the banks affected, they take precautionary measures to safeguard consumer data. So, Jess, do you want to come in?
Governor, maybe if I could take the opportunity also to perhaps explain, to explain also that the potential breach at IP88 involves payment gateway services and not payment systems that actually processes payment transactions. So, the services that we're talking about here are just services that capture and transmit customer and merchant information. At the bank's end, all online card payments, they will continue to process, and that will be subject to strong authentication methods that banks practice currently. So when we were made aware of this incident, we have immediately informed banks to make sure that they're taking additional protective measures as may be necessary to protect cardholders, and to immediately notify cardholders of those measures. And also we've made sure that, in the event of any reports by customers of suspicious transactions, that they will be very swift to investigate those and customers, particularly if you are undertaking some of these transactions with foreign merchants that may not observe strong authentication measures, customers will not be liable for unauthorized transactions.
Right. Are there any miscellaneous questions? Non-economics, non-financial stability? So yes, Chester. Right. Thank you, Chester. Governor, perhaps in the interest of time, we can collect a couple of other questions, if any. Yes?
Sorry, just one more, Governor. Has Bank Negara set a deadline on the foreign insurer ownership to next year? Because it was previously reported, according to sources, that Bank Negara has set a deadline end of next year. So just an update on that.
Right. So foreign insurance ownership to next year. All right. Okay. Second question. Yes? Sorry, can you use the mic, please? Yeah, thanks. Sorry.
Yeah. Sorry. Earlier, in addition to what you've mentioned, can I know when exactly was Bank Negara made aware of the data breach incident?
End of July.
Would there be any actions taken against IP88, perhaps a sanction of sort? Thank you.
Okay, so I think we just go these three questions. I think the Governor, first question is on the grandfathering rule. The second one is on foreign insurance ownership, on whether we have issued anything, we have postponed it to the end of the year. And the third one is when will we made aware, and are we going to take action on IP88? Governor, over to you.
Okay. So the FSA, right? So when the FSA came into force in 2013, we grandfathered whatever approvals that were given under the BAFIA for any individuals to exceed the 10%. So it is very specific to a group of shareholders that were already holding shares in excess of that 10% prior to the coming into force of the FSA. So any future acquisitions by individuals would need to comply with the 10% limit. So I will take your question. When we will make known towards the end of July by IP88. And going back to the diagram, so IP88 is not technically supervised by Bank Negara, right? So like what Jess had said, it is the payment facilitator function of IP88 that was the cause of the data breach. Where the data breach happened. So at this current juncture, we are awaiting for the investigations to be completed before we decide on the appropriate action that needs to be taken.
And Governor, maybe just to add, at this stage, there's no evidence. There's no evidence to suggest any vulnerabilities at the banking systems end at all.
Yeah.
Governor, the last question on foreign insurance ownership.
Actually, we did actually, in terms of the deadline, we did mention next year for them to complete in terms of the divestment, but post next year, there will be only the cash options that's possible.
And what will happen if they do not comply?
So that's why I think post next year will be the cash options in terms of the contribution. That's what has been done by GE and the rest.
Okay.
Okay. In the interest of time, this is the last round of questions. Yes.
Yes. Madam Governor or Tan Sri, can you elaborate a little bit more about the impact of the ringgit on inflation on food prices? Can you share a little bit more data?
Sorry, can you be louder? Impact of ringgit and imported. Yeah, import inflation. Okay.
Especially in terms of cost of living.
So can we go back to this stylized illustration? So it will depend on the products. So for an example here, in Indian mackerel, the magnitude of exchange rate pass through at 26% is much higher than the apple at 8%. But at the aggregate level, the main factor that is driving especially food inflation is still the global food prices. So what we have done here in this chart is to show you an illustration of the wheat prices. So wheat prices had gone up, right, from $374 to about $459. So that accounts for 80% of the increase, right? So in ringgit terms, when you translate that, the global prices itself contribute to 80% of the wheat prices here in Malaysia, and the exchange rate only constitute about 20%.
Without, if the 18, is that right? Because of the wheat prices? When you say 80,
yeah,
20,
okay.
is that correct?
The pass-through of the exchange rate to the CPI basket is still very small currently. It is still quite small at the macro level. But when we go into individual, it will vary. But on average, the pass-through is still quite small.
Pass-through is still quite small. When we digest it on the CPI, the food item, because we know that food inflation has gone up further than the others. If we assume ringgit has stayed the same, what would the CPI on food be? Do we have a figure on that, please?
Oh no, I don't have a figure. But that's why we took one product. We took one product, wheat, for example, that is shown on the chart, Cindy. So in this example, like I said, exchange rate depreciation only contributed to 20% of the increase in ringgit terms.
This is just for wheat, right?
Yeah.
Not necessarily other things like
no.
Chinese carrots or I don't know what you call it.
So it really, so that's why we showed that it really is, you need to go by product. So when we look at Indian mackerel, for example, the exchange rate pass-through is much higher compared to apples.
Right.
So, but at the aggregate level, when you look at everything in totality, the pass-through to the broader CPI is still quite small.
Quite small. Can you?
Relative to global commodity prices.
Okay. Can we apply the 80-20 in general, or is it just for wheat? Oh,
you cannot.
Okay.
Because like I said, like for apple, for example, the exchange rate pass-through only accounts for 8%.
Okay.
Thanks, Sidi.
Just
Yes.
one more, just to give a better perspective on the savings of probably the individuals here, because Bank Negara's involvement in the financial education network, maybe you can give us some perspective, Governor, because 145 billion ringgit has been taken out for EPF since pandemic. So we do have people, if you just research, some of them are actually channeling it to ASB, maybe some to Tabung Haji, Plabramara. So maybe just to give, do you have a figure, maybe you can share that, yes, they withdrew from EPF, but as well as other savings has actually propped up due to this. Because for individuals, sometimes they find it's much more easier taking out from EPF so that you can take it out from ASB at any point of time, and it's much more easier. So is there any figure that you can share that actually savings actually increase in the other due to this withdrawal from EPF?
So we don't have micro numbers, but at the macro level, you look at it, it's just a recycling of deposits within the system, isn't it? Because, it would move from a deposit by EPF into deposits by either individuals into the ASB or Tabung Haji, or even the merchants themselves. Because if the EPF contributor were to use the EPF withdrawal to buy goods, then the merchant would then use that money to deposit in his account. So it's just a recycling of the savings. So, yes, deposit continue to increase, but to attribute to whether it is from the EPF withdrawal is quite difficult for us to do at the macro level without having access to, the micro level data, which we do not have access to because course, privacy, confidentiality concerns, requirements, not even concerns, requirements. So EPF is subjected to its own law. It has its own secrecy provisions. So we will not have access to that micro data. But again, you understand that it is just a recycling of the deposits from EPF into either individuals or businesses.
Just on the EPF withdrawals, because majority of it is the Bumiputras, but at the same time, they are actually taking it and putting it into this savings account. So just to give a better perspective, actually, I mean, I thought maybe you can share some figure, but yeah, you mentioned.
So we will not be able to make that conclusion looking at just broad numbers.
All right.
Yeah.
Thank you.
All right, thank you.
Anything just want to add?
Sorry.
But perhaps if you look at the distribution of depositors by deposits by different categories of depositors, so if you compare to pre-pandemic, so if you take 2019 versus June 2022, deposits by individuals have more or less been quite stable, actually, around the same proportion. Deposits by domestic businesses have increased slightly from 32% of total deposits to close to 34%. And the reduction has been by the non-bank financial institutions like EPF and the likes. So that gives you maybe a sense.
All right, thank you everyone. Thanks for coming. This is the end of our press conference. Just two short remarks. At the end of the, we will be releasing the transcript of this presentation very shortly on our website. And on the second bit is that DOSM has also kindly provided some publications which will be available outside the hall. You can collect it after this. Thank you so much.